Hello friends, Nalinakshay Swami here. I'm going to talk about today's trade. Today's how the liquidity got into the market. In the opening bell, actually, this is 3-minute candle. You can see it open high. If you place cursor on this candle, you can see opened at 17,501.3 and 17,530. By seeing the candle immediately, you will feel that, oh, this is a sell-off and sell-off will continue. But what happened here is the first 3-minute candle made an high of 17,501 to 502 and made a low of 17,436. So 17,501 and then 17,436. Okay. 436 and later, see, if you see immediately, if you see the price action, you have to wait for the price action. It didn't break the low of the first candle. The price started trading for another 9 minutes. That means 10 minutes within the range of the first 3-minute candle. And it could not make the lower low of the, this is the 17,436 was the low, and another low was 17,437 point. So, see, beneath this wick, it becomes a demand zone. And above this is a supply zone. So, price was within the demand zone and price started to come out of this zone. So you can see the change in the behavior of the, you can see equal lows, equal highs, sorry. Equal high is 17,457. And then price started moving up. So you can anticipate sometimes price will move up to this level and get rejected. Sometimes in the market get rejected and it will seek the liquidity. As of today now, so this liquidity was open actually. This liquidity was open and this area was equal highs were there. And later, after traveling to this area, price started falling in a range. You can see the range over here. When you see the range, this is also another liquidity area. So you need to mark out all these areas. And then price started moving above this, breaking above this supply zone and started moving up. Started moving up and it started in a 3-trail fashion. Price, the momentum was not there much. Let me take this. Yeah. Price was not moving. There was no momentum there. After that, it started making a double top. Double top and price could not go above this level. So you can see stop loss hunting there. Why price could not go above the this level? Made an high of 15,334 There is a reason for that. I'll apply this level. Let me change the color to blue, and I'll show it to you on the 2-hour chart. 2-hour chart. See, this is the level actually. 17,531, which is equal top over there. If you see there is an equal top. Here you can see. So price halted at this level. If you come back there, so halted this level, it acted as a resistance. Okay, let me go back to the 3-minute time frame and see what happened. See what happened. Price started moving. It made a double top. Price made a double top and started moving in what fashion? It came down to this liquidity area. This area, breakout area, and took support and made an high. It could not make it could not go to this level at all. I was thinking actually, I was thinking if it here I thought in this area around 1245 itself I'll get the liquidity down to this level. Why this level? I'll show it to you. I had marked exactly that level. Exactly that level. I knew that the market will seek liquidity over there. I'll show you, zoom it out and show it to you. Why that level exactly? See, it didn't fall and it turned around, it made an high. And later around 121, 1 o'clock, 1:30, around 1:20, the price started falling like anything. Falling like anything, it came down to 17,425. I'll go to the which time frame I need to go. Let me go to hourly or 5 minutes. Yeah, 5 minutes. Okay. In 15 minutes, let me go there. See, price came down to this area. This was the level I had marked. Price can come back to this level. Let me go to 5 minutes. Yeah. This is the area. I had anticipated they will push the price to this level, 17,426. See, 426. Just a week actually, just a week. It made a low. Now it will fill this gap also. So filling this gap, probably another roundabout price action will be seen here. And after making the low, price made a drastic up move from there. Around 2 o'clock, there was a drastic up move. You can see the big player entering into this area. You can see the big candles. Big candles. See, after taking it to this high, he started distributing the shares. There was liquidity. Price went up, choppy, became up, down, and it made an high as if he is going to go past that area, but he fell down, seeking the liquidity below this area. When there are liquidity equal highs, and mark the equal high. Let me go to 3 minutes. This was the equal high. So I was wondering when it will come. See, there is just, he had pushed the price to this level in a fraction of a second and it went up. The same minute. So this time frame is 3 minutes. Within the 3 minute itself, the price came to 427 from the level of 468 to 400. So 40 points pushed down and closed at the level of 464, more than 40 points. So within one candle, 40 points. So what? Let me measure how many points in this 3 minute candle. This is 47 points, and then this is exactly 47, equal move. And but the price has been pushed there, and price made an higher low. Here it made a low and pushed up to this level and made a higher low. There you can see change in the behavior of the market. Here price started moving up. So you can go long after confirmation, or otherwise by seeing the aggressive price action. If you are very expert, you can go. Usually I go aggressive and I take position at this place by marking the levels beforehand itself. This is the area I was anticipating, because from 464 was the level which it broke previous high. Previous high was 464, and second high, when the price pushed to this area, it was 433. You can see there. And another level is 410. And this is the flip level, 422 to 426. So price usually, this was the anticipated area for me, price touched there. That's how you can trade. I take aggressively by seeing this level, anticipating. So because why? The reason is once price has gone up there, he has pushed. This is the break of the structure. You can see this is the break of the structure. Let me remove the drawings. And this is break of the structure, and he has pushed high. So he has, the big institution, it has grabbed all the liquidity, sell stops, and he has pushed high to buy all this liquidity, and also to move higher, he needs double the amount of the money. Double the amount of the money. So when he needs double the amount of the money, he will not go into the loss. So here, after pushing it higher, he took it to another level. So he was not getting any liquidity. He started distributing his shares, buy shares, and he wanted to go again. Definitely after liquidity, he will push it higher because he is offloading the shares. See, he is offloading the shares for the profit. Shares have been offloaded for the profit. He has exited there. Now, here, this is the liquidity. Liquidity void was there. From year to year, another way of looking at is, you need not go back. You just mark this. Take this tool and mark the 50% of that. So price will find the support anywhere in between this area. You can anticipate. Usually they will push the price down below it to collect the stop losses. Stop losses, they are not buy stop losses because he has pushed, gapped up and he has pushed down. These are the sell stop loss, pending sell stop loss. He has collected it and he moved it up. So again, he moved it up to this level. And so now he has got the liquidity for this gap up and he has offloaded the shares. He came to this level. So now while closing down, price has come down. Again, price has come down from 17,538 to 17,491. So now where he has to come down, you can anticipate price is broken out of this structure. Price broken out of this structure. These are he has bought all these sell stops. So he has to come down and create liquidity. And where he will come, the anticipated level is below this. Probably he will come down. And why? Because in this area, you can see a range. In this area only, lot of liquidity, even buy stops will also be available in this area. These are the buy stops will be there. So he will come down and hit this level. You can anticipate the price to come down to 17,255 also. How he will come down? It depends. He may not come down straight. He may confuse you, confuse anybody as if he is going to go up like this. And then he may start coming down. And you may find expiry around this area, 252, 324. Expiry in this area. That's how the big players will track the liquidity. And if you are with him, if you are steps with him, you can make money. That's how I was able to make money today by analyzing the price action. See, this price action I analyzed when this is a huge gap up and he is selling off, means he will not go in loss. So definitely the price will be pulled to this level. And this is a buy area. That is the logic. You should use it and you should see the price action and you should learn it actually. If you learn these tricks only, you can not only candlesticks or any price action, you should also know the institutional way of trading. If you see institutional way of trading, if you master it, then only you can make profit in the market. I hope this will help you to understand how banks will play with the liquidity. Liquidity means orders, pending orders. How they grab all the liquidity and they move, the price is moved higher or lower. So where the liquidity sits, it always sits at the equal highs and equal lows. So try to locate the equal highs and equal lows and also the range actually. See, this is the range. After going here, it made a range. So I was anticipating the liquidity price has been pushed down to this area. This is the liquidity area. And then price has taken from here, you can guess 427 to 538 is almost 110 points. 110 points, you could have grabbed it if you would have been with him. So people tend to panic by seeing this way of push down. This is the usual way these big players will play with the retailers. Here, they achieved all these things by letting the retailers to trade in. See, this is the retailer's area. This area, he is out of the picture. Here, he came out of the picture after pushing higher. He came out of this push area. Sorry, I'm not able to put this. Anyway, now here, came out of this picture, only retailers. See, retailers have been engaged in buy and sell thing. So when you see this type of price action, up and down, this is nothing but liquidity has been created. So liquidity has been created, and also it has been, price has been offloaded by the big player. When he offloads the price, he has exchanged with the engaged both buyers and sellers. So buyers thought it will go up, sellers thought it will come down. They will keep all the stop losses. So stop loss hunting will be taken place, because this is the stop loss hunting. Sell stop, all the sell stops have been hunted and all the buy stops have been hunted. So he got the liquidity and he pushed the market higher. Pushed the market higher and he completely offloaded his shares. Offloaded his shares. Now he will come down. Possibly he will let the market down to another liquidity area to grab all the stop losses. This is the area, one area. He can grab the liquidity over here. And this is another area. He can grab the liquidity, not here, below this level. 17,339. Around this area, he can grab the liquidity. So the market is played in this way. Market price push up and push down is played in this way. If you try to locate how these players are playing, how algos have been coded, you can trade better. I hope you will understand from now onwards. Don't engage into this area. Don't engage yourself in this area of choppiness. Buy, sell, and it is a trap. And then see, you can see the trap and down. And he achieved what he wanted and he pushed it up. You are amazed to see this, right? Okay, friends. Thank you very much. Nalinakshi Swami signing off.